the reason I wanted to talk about this particular topic was because I just had a conversation with the new agent the other day about this, which is your second sale, and how your second sale is always going to be 3 times more profitable than your first sale. And this is just something that we've created in the Sozo Capital Partner system that I took with me from a previous company where we refined this system and just kind of, we brought it here, and I'd really like to see it executed and implemented more, because it really does help agents reach that multiple 6-figure level in their income. And that is when we take a lead and we solve a problem. So somebody fills out a mortgage lead, or they fill out an IVR lead, or it's an internet lead. Like Lamar just knocked it out of the park the other day with an internet lead, took a $9 lead. It's over 2,700 in AP. I mean, like that ROI is just tremendous. And so one of the things that I have always taught my team is go solve that problem, right? Somebody went on the internet, they were shopping for coverage for a specific amount. We dialed up, they answered, we set the appointment, we went and solved that problem, right? We found out where the sale is made, we found the pain, how long they can stay in a house, what that coverage was meant for, all those different things that we've talked about all over the weeks that have been recorded, and the things that, that we train on. But one of the things that we find out from a client during that process is we find out things about their 401k, right? Yes. We find out things about their 403bs. We find out things about, money that they have in a savings account. We find out these questions, we find out these answers to these questions that we ask, because we're trying to help them in this first problem. But we're taking mental notes, or we're writing down notes on the lead form about the questions that we've asked. So one of the things that we had a lot of success doing is being able to then come back to that client depending upon their age. I'll give you an example. Let's say they're age 55 and under. Well, we can always come back to them with an IUL illustration at $500 a month. So what you're doing is upon policy delivery. Now, again, you guys are virtual, so I don't know how you do your policy deliveries. I don't know if you make an agreement with your client that says, Kyle, when you get that policy in the mail from Foresters, right? Because Foresters is historically known to mail the policy directly to the client, whereas a lot of carriers will mail the policy directly to the agent. So if your process is, which in my mind, I'm thinking it should be, especially some of the virtual appointments I've done, I make an agreement with my client that says, when you get the policy in the mail, I want you to call me the day it arrives, so that we can get back on a screen share and I can go back through it with you. That would be the exact same thing as when the policy arrives, we need to schedule a second appointment so I can come back out to your home to go through the policy with you, to show you different things in the policy, show you where your living benefits are, just show you different things, show you, this is where the premium, this is where the carrier's information is. And it's just basically, it's you going over and above to make sure that the client sees you one more time. What's going to come out of that? Referrals are going to come out of that, and a second sale 2 out of 5 times will come out of it. So whatever your individual process is in doing that policy review, once they receive it, what I do is I will then pull up on my screen and I'll say, how we talked a little bit about that 401k you have at your job? And how, like I had mentioned to you, that there's some alternative programs that bridge the gap from the time when you're going to start paying taxes on that retirement plan. Remember how I said that there was a tax-free retirement plan that would also bridge the gap, that you could also start beginning to take an income from tax-free? It was a little bit different. And I'll just explain a couple bullet points. It's one of those plans where if you take out money prior to age 59 and a half, there's no penalty. And you can actually design it so that at age 72, when you have to start taking your RMDs, right, and be taxed on your money, This is a plan that would be a non-taxable retirement plan. And so you have the choice that you can either wait till you completely deplete your 401k and then start taking money out of the tax-free account to bridge the gap, or you can actually take them both at the same time if you just want to maximize your income, right? So then I'll just pull up my screen and I'll just walk them through an illustration. I always started at $500 a month. If that's too high, then you drop it down to 300 or 250. Do it based on their age. Now, if you're saying to yourself, you know, Brett, when I was showing them the first plan, money was an issue. They were trying to get the plan that had, right? They wanted to go with the one with the lowest premium, trying to get the most coverage, and money was an issue. Here's the difference. The difference is when we're talking about a living benefits plan, even when we're building out the most value in the plan and getting them to tell us why they need the coverage, in the back of their mind, a lot of times it's still a new bill. Is everybody with me? Like, it's still a new bill that they're going to be paying for every month. Whereas a retirement plan is completely different. A retirement plan is a necessity. And out of necessity, all of a sudden, the individual who is cutting hairs at $120 a month can all of a sudden find $500 a month for the retirement, because the thought process is different. And so what we found was that 2 out of every 5 people we showed that IUL illustration to, 2 out of 5 went for it, the $500 a month one. And then another 1 more would go for the one that dropped down to about $250 a month. And then the other 2 just wouldn't do it. They would just say, oh, let me think about it. I'm good. We're good for now. And that's just on the IUL illustration. What if they're age 60 and above, and their time horizon has reached the point where they now have accumulated in a qualified plan money that they want to keep safe and give it growth, have liquidity, okay? And so now what we can do is now we can get an edified expert involved, and we can get a Lamar Anderson involved and make that introduction to let them know that there's still an option for them to be able to grow that nest egg that they've grown over the last 25 years. And then make the introduction to an edified expert. If you try to do that product yourself, unless you're 100% confident in yourself, that's number one. You don't need to be confident in you don't need to be an expert in the product. That will come in explaining how the product works by running an illustration and walking a client through the illustration. It's the same thing with the tax-free retirement plan. You're never going to be comfortable with an IUL plan until you start running illustrations over and over again, and then start walking a client through the illustration, and then going back into your training center and then watching some training videos on your downtime to get yourself comfortable. It's the same thing with an indexed annuity. You'll never be 100% ready until you actually do it. Like, you actually have to do it and then go through the illustration. And then all of a sudden you're like, oh my God, what was I so scared about? Up until that moment though, understand we have individuals in place that can actually help you with your client. You'll still get paid on it, but now you've gone over and above and beyond what normal agents do. Don't let another financial services individual who works in your space, not in Equus, but who works in the industry, take over that client's retirement plan. When you easily, just by asking a couple extra questions or doing a policy delivery, you easily could have been able to acquire that client and now exponentially built up your income. So that was just something, just a couple tips that wanted to give you here today. Again, if you're fearful of that conversation, bring in someone else. Bring in somebody like myself or a Lamar, or Daniel, you work in Daniel's group, right? You work in whoever's group that you're working in. Mike Hall obviously has been doing this for years, right? So anybody who is the upline manager normally has a level of expertise in these two areas. Or, you just get somebody like a Lamar Anderson who's headlining up the pilot program to help you out with that as well, or whoever that person is in that division.